Good morning. This is my morning market brief for February 26, 2021. Basically, a quick rundown with the markets. We are catching a little bit of a bounce this morning after a massive sell off yesterday. So I'm just going to give a quick rundown. We broke support on the close yesterday. At the closing price, it was anybody's guess which way the markets were going to go. They are trying to defend price so far this morning. We are still below the breakdown point, even in this market session here. So I do want to point that out. We're going to have to start accepting prices above. Well, we're coming right into support here, the 383.70 area. And basically this candle back here, we need to start accepting prices in this range going into the morning session. I think it's going to be very difficult to do, but we can do it. So, just one of the takeaways that I have this morning. Really, uh, really important to note that. And then if you go out on your 5 minute here in your Bollinger Bands, we are trying to put higher prices in above. That's that trend line I was showing you. We need to start accepting prices above that this morning, and we are above the 50 SMA and 1 standard deviation. So, in theory, they are trying to trend higher here at 4:22 in the morning. So just keep that in mind. So what I'm seeing here is this primary uptrend channel, and we'll write down on the lower end of the channel going into today on our S&Ps. You go down on a 1 hour here, and you can look at, we broke that channel again. We broke it Wednesday. Now we're going into, oh no, we broke it Tuesday. We broke it Thursday, and now we're going into Friday broken as well. 3 days in a row, or 3 days now, broken this channel on the SPY. So just keep this in mind. This is a broken pattern. So until proven otherwise, and basically we have rejected all of this upper distribution. So that's the head, and this is now forming the right shoulder potentially here. So just keep that in mind going forward in today's session. We got a lot of work to do to save this market, in my opinion, going forward here. So I do want to point that out. In past, if you also look at this Bollinger Band, typically when we get a sell signal, we almost always test this 50 SMA, and we have not even back tested that yet. So I'm thinking maybe not today, but maybe here real soon, first of next week or whatever, we're going to at the very least be testing this, the 380 area on the S&Ps, which that's a really easy thing to do considering the implied volatilities. So just keep that in mind. So I'm keeping a very close eye on our volatility. We had a massive spike yesterday. We were still hovering inside a weekly value. That's 70% of the inventory. And we had a little bit of a sell off there into the close. So I just want to keep a very close eye here. If we start putting accepting volatility prices above this range, that's going to get really bad for the markets. So even staying up at these levels, the markets can sell off. Just maintaining a bid even at these levels can keep the markets in a sell pattern. And basically, when you get around 28 on the S&Ps, you're expecting about a 2% daily intraday move on your S&Ps. So just keep that in mind. We're looking 2% upside, 2% downside potential with this heightened volatility going into today's session. Okay. Okay. Also, in that same tone with volatility, this is your VX futures and your different expirations. We are getting some signs of backwardation now. We're getting some strikes like the 4 day out now. As of yesterday, we're getting heightened volatility here in the next 4 days, but 12 days out, they're still not predicting higher volatility. So, in theory, because they're not bidding up 12 days out or 19 days out, in theory, this is a buy the dip scenario coming into today's session. Okay, so I do want to point that out. We do have the idea of they're going to pass stimulus going to hit the market today. So yeah, this could very easily be buy the dip going into today's session, and that's what the volatility is telling us right here. That backwardation happening on that front end contract. Okay, and so I do want to point that out going into today's session. For the next 2 weeks, they're really not pricing. They're not panicking on this volatility, which that could all change today. But this is, like I said, indicative of a buy the dip scenario going into today's session. Okay. Some other things I'm seeing this morning. We were trying to push out on our bonds, 30-year bonds, to make new highs. Looks like they're coming back in a little bit here. I had told people in the trading room that I had thought we had hit the 100% target um, for like the 10-year, and the 30-year wicked out actually heading at yesterday too. We had a very bad auction. Can't read too much into that. As um, all you have to have is fewer people show up to the auction to and to cause that real quick reaction. And that might be all they were trying to do, was just try to put that scare into people so big money could buy in before the stimulus announcement. And that's something you have to keep in the back of your mind here. Everybody knows that they're going to be voting on that stimulus today. Does big money want to be buying this dip? And I mean, honestly, on my scans going into the close, Apple and Amazon calls were firing above average volume into the close yesterday. So just keep that in the back of your mind. Some of the things that have really gotten punished, they might actually be coming in here and trying to support that for the next couple few days. So I do want to keep that out there, that idea fresh. Another thing in the I want to mention here this morning, we did, if you do a measured move off that last sell down in SPY, we have, in my opinion, achieved the 100% retracement. If you go down in 1 hour, it's a little bit more visible what exactly happened. This actually lines up, the fibs line up really good with the sell off, what we just had. And so we did satisfy 100% retracement versus the last relative sell off on S&Ps. So I do want to float that idea out there also versus those all-time highs. I think it's a little bit more problematic than last time, but I do want to give an idea that we actually have a technical normalized correction already in place. Okay. And my final comment about SPY here, until we get back over to 385.30, this thing is in a lot of trouble. Okay, so basically this head has been rejected. So it's no I am not suggesting that we're out of the woods here at all on this market. So I do want to point that out. Basically, pops should be shorted until we start seeing buyers come in buying this up. We need to see a move like that early this morning to save SPY. So something to keep in mind. I'm doing a little bit more in-depth talk versus yesterday. So basically, what I'm thinking here, we never did get a back test. Saw a back test of this. It just basically rocket shipped up. We had a better breakout pattern on SPYs than we did on Qs. Qs were just too strong. So I mean, I just think you want to see the Qs back test that breakout at the very least, and that is my primary thesis. And if that's the case, we are going to be breaking significantly away from our 1 standard deviation, similar to what we had way back here in the early part of the year. So I do want to keep this. This is a very dangerous situation, in my opinion, on technology. Okay, on a relative basis, that last pullback we've had, like I said, this one here looks to be much more severe. We do have hit the 1.618 as of yesterday on relative to the last pullback on the S&P or the Qs here. So keep that in mind. Basically, I was watching this area through here because that was the breakout area, and I was talking to several people in the room that I thought if that failed yesterday morning, we were really struggling at that early yesterday morning. If you go down on a 1 hour chart, you can see it better here. And basically, we came up here, uh, and yesterday, once we broke that, we were all in deep trouble there. Uh, so basically, uh, major troubles here once we broke that. So you need to get back up to 319.75 here for any chance of saving this trend, in my opinion. So far, we are just getting a very anemic bounce this morning in the Qs. And then one last way to look at Qs, and this is really the weakest sector in the markets. We have broken squarely away from our primary uptrend in our Qs. Like I said, I think we're coming all the way back down to that trend line breakout. So definitely my last takeaway on the Qs. And my last takeaway, IWM, the uptrend is still intact. I mean, we just keep making higher highs, higher highs. We're bouncing off of the prior week's or the prior month's value area high. So the monthly trend is still solidly in place. I do want to point out here, if you go in on the time frame here, you notice how we came into that one standard deviation, the size of the candles, we came into that, and then we had a little bit bigger candles right here, sell off, a little bit more selling pressure on the body of the candles and stuff. And now look at this, we're coming into this in a very strong sell candle this time on that one standard deviation. So the selling pressure does seem to be amplifying here on our Russell as of yesterday. So I do want to make that note going forward into today's session. Okay, this chart's a little bit more complicated. I got more into this, but yeah, we did. You see this channel area and double channel area. We did break away from channel yesterday afternoon. We're trying to recover it right here, right now, on what's going on with the Russell. So I do want to point to what's going on here. Looks like an oversold bounce scenario back into this trading zone so far, or a complete and total rejection. I mean, we don't know yet. So I do want to point that out going forward in today's. Right here is the primary channel low. So this is what we want to be or primary channel high. This is what we want to be targeting, that red line here, possibly for the end of the week. So I do want to point that out. And my final view on the Russell here, this is a little bit different way I got these channels drawn here. Clear rejection, where we are rejecting that one standard deviation on the Russell so far pre-market here on the 4 hour. So just keep that in mind. We came up and saw rejection of that. Like I said, my primary areas are down here at the 2107 area. That's the primary area for support, in my opinion. My opinion, we also have we have the breakout, that breakout candle right there. So right here, right now, we're bouncing off this candle right here. We are seeing a strong bounce. So if we lose this candle, this pre-market low, you're putting all this inventory here back in the picture. Okay, so basically, we are bouncing off a critical support on the Russell here, and the early market here, and so that's my takeaway this morning. And so just keep that in mind. This could be a head setting up here for a head and a right shoulder developing, starting to build out here. If we break these lows, the 2160 80 area, we break that, and the Russell could be changing character as well with the rest of the market. So far this morning, they brought the crude down, but they do not want to be given. They're not giving up on crude yet, so that's a good sign. So my final takeaway for the end of the day, I do think they're trying to buy the dip. My VIX is supporting that idea, and the end of the day option action that I saw yesterday supports that thesis. But I have to say there is much damage that has to be repaired today. So just putting those ideas out there. We'll see what happens as the day goes on, and Thanks a lot. Leave comments below. Please retweet the video if you like it, and yeah, like it if you like it at the bottom as well. Okay. So I appreciate all the feedback you guys have been giving me, and hopefully we can make some money today.